Hello everyone, welcome back. We'll continue with the discussion on the preparation of investment accounts. So in the previous video, we discussed about the preparation of investment account when purchase or sale happens on the date of payment of interest. So now we'll discuss the second case, that means the purchase or sale of investment before the date of payment of interest. In this particular situation, we have to take care of two main concepts. First is cum interest quotation and second is ex interest quotation. And cum interest quotation as well as ex interest quotations can come both in the sales and the purchases. So cum means with, and ex interest, ex means without. So the term cum interest and ex interest relates to fixed interest bearing securities, and also they come up for consideration when those securities are purchased or sold. So cum interest can be expanded as cumulative interest or inclusive of interest, and ex interest can be expanded as exclusive of interest or without interest. Okay, so cum interest quotations can come either at the time of sale or at the time of purchase. Ex interest quotations can also come at the time of sales and at the time of purchase. So, in this video, we'll discuss about the cum interest quotations at the time of sale and purchase. And in the next video, we'll discuss about the ex interest quotations with an example. So first, we'll see the cum interest or dividend purchases. So let's see how the question comes, how the situation arises. On 1st March 2016, Surya Finance Limited purchased 3,012% government bonds of 100 rupees each at 96 each, cum interest. So, first sentence points out that it is a purchase, and this purchase is happened on cum interest basis. Half yearly interest is payable on 30th June and 31st December every year. So check for the purchase date. It is on 1st March 2016 and it is not on 1st January or not on 1st July. So it is clear that the purchase is done before the date of payment of interest. Okay. So now we'll prepare the investment ledger of Surya Finance Limited and see how these transactions are recorded. So this is the investment account, 12% government bonds account. We'll start with the purchase. So on 1st March 2016, there was a purchase. There was a purchase of 3,000 debentures on 100 each. So what will be the nominal value? 3,000 into 100, that comes to 3 lakh. Then, so that is recorded here, 3 lakh. Since the purchase is done on a cum interest basis, that means inclusive of interest, in the interest column, we have to show that particular amount of interest. Okay, so how to calculate that particular amount of interest? Nominal value into percentage into, that is 3 lakh into 12 by 100 into what will be the number of months? Number of months will be, say for example, here in this case interest is paid on a half yearly basis on 30th June as well as 31st December. And this purchase happened on 1st of March. So we have to check the number of months between the month where we paid the interest latest and the month when purchase happened. That means purchase happened in this case on 1st March. 1st March. And before this purchase, when was the last time the interest due was happened? That is on 31st December. 31st December. So, see how many months are involved between these 2 months. Between 1st March and between 31st December 2015 and 1st March 2016, how many months are involved? January, February. 2 full months are involved. So into 2 by 12. Into 2 by 12. So this comes to 6,000, which is the come interest. That should come in the interest or dividend column in the investment account. Okay. So I'll tell you the calculation once again. Since the purchase happened on come interest, there will be an amount that should come in the interest or dividend column because the purchase was happened on a come interest basis. So now we'll calculate what is the amount of interest. So 3 lakh into, that is nominal value into percentage of interest is 12 into. So we have to calculate for how many months. So look for the last payment of interest. The recent payment of interest happened on 31st December 2015. And look for the date when the purchase was happened. That is 1st March 2016. So see how many months are there between these two time period. So we have 2 full months. So the interest of that 2 months are calculated here as 6,000. Okay. Then now I hope the interest calculation is clear to you. Okay. Now we'll go for the principal calculation. Normally we calculated the value of principal as 3000 into 96. 3000 into 96 is calculated as the nominal value. 3000 into 96 comes to 2,88,000. See, the first working note, 2,88,000. But in this case, what happens is 2 months interest is shown in the interest or dividend column. Okay, 2 months interest is already shown. So in the nominal value column, we have to record an amount which is deducted by this amount of interest. That means 2,88,000 minus the amount of interest will be shown in the principal column. 2,88,000 minus 6,000 comes to 2,82,000. This should be shown on the principal column. Okay. So this is the main adjustment at the time of come interest purchase. So we have nominal value. Additional adjustment is we calculated the interest or dividend between the recent payment of interest date and also the purchase date. So that is for 2 months. And then we deduct that particular amount of interest or dividend from the original principal value. That is original principal value is 2,88,000. So it comes to 2,82,000. Okay. So that is a calculation in the case at the time of come interest purchase. So come interest sales is also same, but it will be recorded on the credit side. We will discuss further. Now we have the half yearly interest, that is on 30th June 2016 by bank. We have to calculate the amount of interest, that is nominal value into percentage into 6 by 12. It comes to 80,000. So 80,000. And also at the time at the end of the year, that is 31st December 2016, again we have an interest. Calculation is same, 18,000 is recorded. Now we will balance the interest to dividend column first. We have 36,000 on the credit side and the balance comes to 30,000, which is written to P&L account. Okay, 30,000. Then we'll balance the nominal value column. The nominal value column balance is same, 3 lakh. Then we'll balance the principal value column, which is also same, that is 2,82,000. Okay. So since here no market price is mentioned in the question, we no need to check whether it is market price or cost price, whichever is less. Okay, so this is the calculation at the time of come interest purchase. So I hope you understood this calculation. Okay, so go through the calculation again and work out more problems so that you will be clear about the adjustments. There is only an adjustment in the interest column and also in the principal value column. Okay. Now we'll move to come interest or dividend sales. So this is same as come interest to dividend purchase, only just one difference, that is here it is sales and there it was purchase. So sales will be recorded on the credit side of the investment account. So let's see the question. On 1st April 2016, Janata Limited has 3 lakh 6% government stock at 94 each, face value is 100. So in the earlier question, it was like Janata Limited purchased or Surya Limited purchased, because that was the situation of purchase. Here they mention it as Janata Limited has. So it means that it has an opening balance of rupees 3 lakh debentures. Okay, it has an opening balance. So we will record it as what? Balance brought down 3 lakh. 1st April 2016 to balance brought down 3 lakh. Okay, that will be the nominal value. Then interest is payable half yearly on 31st March and 30th September. The company sold rupees 90,000 of the stock of 95 come interest on 1st June 2016. The stock was quoted at rupees 96 x interest at the stock exchange on that date. So this is the market price. Okay, so we'll take it in account at the last. So we'll start with the transaction. So on 1st April 2016 to balance brought on, we have rupees 3 lakh in the nominal value column. And what will be the principal value? So here the come interest concept comes at the time of sale. So here what will be the principal value at the beginning? I mean on the balance brought on figure, we'll have, so 3 lakh means the face value is 100. So how many debentures are there? 3000 debentures are there. So 3000 into 94 will be the principal value. 3000 into 94. Okay. So 3000 into 94. So you just calculate and see. 3000 into 94 is 2,82,000. So that is the principal value. I hope that transaction is clear. Then, so that was on 1st April. And when we come to the next point, the sales happened on 1st June 2016. So it was before 30th September. So we have to record sales first. 1st June 2016 by bank. So rupees 90,000 debentures or rupees 90,000 government bonds were sold. So nominal value is 90,000. And that was on a come interest basis. Come interest basis. So let's see. It happened, sales happened on 1st June 2016. When was the last time the interest payment was done? On 31st March 2016. So how many months are there? March, April, May. Okay, it is on 1st June. So there are 2 months. There are 2 months between the recent interest due date and the sales date. So 2 months. So we have to calculate 2 months interest, that is 90,000 into 6% into 2 by 12. 90,000 into 6% into 2 by 12. See here we have the calculation. That is the accrued interest for 2 months, April and May. Okay, so that is rupees 900. So 900 will be recorded here. Then normally the principal value would be 900. Number of debentures is 900. 900 into 95. Normally 900 into 95 should have been the principal value, that is 85,500 should have been the principal value, but we have to deduct the amount of accrued interest. So we'll get it as 84,600. Same calculation, just one difference. There it was purchase, here it is sales. Okay. Now we have interest on 30th September. We record the interest as 6,300. So that means from 3 lakh, 90,000 is sold. So remaining is 2 lakh 10,000. So 2 lakh 10,000 into 6 by 12 into 6%. That is 6,300 each. Okay. So 31st March 2017 also we have interest, that is 6,300. So now we'll balance the interest column. 13,500 is the credit balance. And here also we have 13,500 which is given to the or written to the P&L account. The nominal value column we'll balance it, so it becomes to 2,10,000. Then principal value column also will balance. So after balancing we get it as 1,97,400. So here there was a quotation price, that is 96 was the market price. Cost price was 94. So which is less? Cost price is less, 94 is less. So it is taken on the basis of cost price. Okay. So that is regarding the come interest sales adjustment. So I hope you are clear about the sale come interest purchase and come interest sales adjustment. So now here you look whether there is an opportunity or whether there is a possibility of what profit on sale. So let's see, let's check it. So 90,000 were sold. That means 900 debentures were sold at 95 each. So 900 debentures were purchased at 94. But since this is the case of come interest, it is automatically what adjusted over there. Okay. So yeah, that's it. So I hope you are clear about the adjustment related to come interest sales and come interest purchase. In the next video, we'll discuss about the ex interest quotations at the time of preparation of investment account. Thank you.